Most men walk into the market thinking they're about to make money. That's the first mistake. They believe the game is about charts, about patterns, about finding that one perfect entry. But let me tell you something. The market has never cared about your entry. It cares about your mind. And most men walk in with a mind that's already lost. You can see it in the way they watch the screen, restless, hungry, almost desperate for something to happen. They don't even realize they've already surrendered control. I've seen this for years. Bright men, educated men, confident men, all brought down to the same quiet place where they start questioning themselves after a few losses. And that's where the real game begins. Not on the chart, but inside the man. You must understand something most people never do. The market doesn't defeat you all at once. It does it slowly, piece by piece. First, it gives you a win, just enough to make you feel clever. Then it takes it back. Not all of it, just enough to make you chase. And chasing, that's where the damage begins. I learned this the hard way. There was a time I believed I could outwork the market, outthink it, outmaneuver it. I studied everything, patterns, indicators, news, sentiment. I thought if I just knew more, I'd win more. But knowledge isn't what separates the few from the many. Control is. And control is rare, because when money is on the line, real money, something shifts inside a man. His decisions stop being decisions and start becoming reactions. Subtle at first, almost invisible, but deadly over time. He moves his stop just a little. He adds to a losing trade just this once. He breaks his rules, convincing himself it's different this time. And the truth is, he doesn't even see it happening. Here is what most men never understand. The market exposes who you are when no one is watching. It doesn't care about your plan. It cares about your behavior under pressure. And real pressure reveals things about you that comfort never will. Fear, ego, impatience. They don't show up when you're studying charts in silence. They show up when the trade is live, when your heart rate changes, when the number on the screen starts to matter just a little too much. That's when the real test begins. And most fail. Not because they're not smart, but because they've never trained themselves to remain still when everything inside them wants to act. The ones who make it look easy, they are not seeing something you're not. That's the illusion. They are not gifted with some secret pattern or hidden indicator. What they have is distance. Emotional distance. They don't need the trade. They don't chase the trade. They don't argue with the market. They wait, and waiting is the hardest thing a man can do when he believes opportunity is slipping away. I've sat through days, sometimes weeks, doing nothing, watching, letting the market move without me, and every part of me wanted to step in, to take control, to force something. But forcing the market is like trying to control the tide. It doesn't respond to effort. It responds to timing. And real timing doesn't come from urgency. It comes from patience, sharpened by experience. Most men never stay long enough to learn that. They burn out not because trading is too hard, but because they never learn to sit with themselves, with their thoughts, their impulses, that quiet voice pushing them to act. That voice is dangerous. It sounds like confidence. It feels like instinct. But most of the time, it's just fear wearing a disguise. Fear of missing out. Fear of missing out. Fear of not making enough fast enough. And fear, when it drives your decisions, will always find a way to take your money. The few who survive learn to recognize that voice, not silence it, but understand it. They don't trust it blindly. They question it. They slow down when it gets louder, because they know the louder it gets, the closer they are to making a mistake. Let me tell you something that took me years to accept. The market is not where you prove yourself. It's where you uncover yourself. And that's why most people fail. Not because the market is unfair, but because it demands a level of honesty, discipline, and self-awareness that most men have never had to develop before. They come in thinking they're here to conquer something external, without realizing the real battle is already inside them. Until that battle is understood, every trade they take carries something dangerous beneath it, something subtle, something invisible until it costs them more than they were willing to lose. And by the time they begin to notice the pattern, the damage has already started shaping the way they think, react, and see every opportunity that comes after. Once the mind has been bruised by the market, it doesn't return to its original state. It changes. And that change is where most men either wake up or quietly fall apart without realizing it. After enough losses, something subtle creeps in. Not panic, not obvious fear, but hesitation. A quiet second guessing of every decision. The kind that slows you down just enough to miss what you once would have taken without thinking. And that hesitation is dangerous, because when the right opportunity finally comes, the one you've been waiting for, you don't take it. Or worse, you watch it unfold perfectly, without you, and then chase it out of frustration. And just like that, the cycle tightens. This is how the market traps a man, not in one moment, but in patterns of behavior, patterns of thought, patterns of reaction. Most never step back far enough to see it. They think the problem is the strategy, so they G it, then they change it again, and again, always searching for something outside themselves, while the truth sits quietly within, waiting to be acknowledged. I've watched men go through dozens of systems, hundreds of indicators, countless hours of analysis, all while carrying the same undisciplined mind from one approach to the next. And every time, they wonder why the result doesn't change. But how could it? If the hand placing the trade hasn't changed, what difference does it make what button you press? A poor mind with a perfect system will still lose. A disciplined mind with a simple system will find a way to survive. And survival in this game is everything, because the longer you stay in the market, the more it reveals, not just about price, but about yourself, your tendencies, your weaknesses, your blind spots. And those blind spots don't look obvious. They hide in the things you justify. I'll just move this stop a little. It'll come back. This setup looks close enough. These decisions don't feel like mistakes in the moment. They feel reasonable, logical even. But the market doesn't punish logic. It punishes inconsistency. And inconsistency is born from emotion. Most men believe they're being rational, when in reality they're being rational, when in reality they're reacting, adjusting, negotiating with their own rules depending on how they feel in that moment. And once you abandon your structure, you're no longer operating with an edge. You're drifting. And drifting in a place like this always leads somewhere costly. The ones who make it look easy have already been through this. They've felt the frustration, the anger, the quiet disappointment after days where nothing goes right. But instead of running from it, they studied it. They paid attention, not just to the trades, but to the decisions behind the trades. Why did I enter here? Why did I hesitate there? What did I hesitate there? What was I feeling when I broke that rule? These questions matter more than any pattern you'll ever learn. Because patterns in the market repeat, but so do patterns in your behavior. If you don't recognize your own, you'll relive them again and again, wondering why the outcome feels so familiar. There was a time I couldn't trust myself, not the market myself. Every decision felt uncertain. Even when I was right, I didn't feel in control. And when I was wrong, it felt heavier than it should have. That's when I realized something most traders never reach. Confidence doesn't come from winning. It comes from knowing you followed your rules regardless of the outcome. That kind of confidence is quiet. It doesn't need validation. It doesn't react to every tick. It simply observes, acts when it should, and accepts when it must. But to get there, you have to confront your impulses. Sit with them, watch them rise, without acting on them. The urge to jump into a trade just because the market is moving. The tension when your position The tension when your position pulls back slightly. The need to interfere just to feel in control. These are not signals. They are tests. Tests of patience. Tests of discipline. Tests of whether you can remain steady when everything inside you wants to move. And the market will keep testing you, over and over, until you either learn or you leave. There's no shortcut, no trick, no secret, only repetition, awareness, and the willingness to see yourself clearly. And that clarity doesn't come easily, because most men don't like what they find when they look closely. Impatience, ego, the need to be right instead of disciplined. Facing that is uncomfortable, but necessary, because until you see it, you can't change it. And until you change it, the market will keep reminding you in ways that cost you something real. Money, yes, but also confidence, belief, and time. Time you won't get back. That's why the few who make it move differently, not faster, not smarter, but steadier. There's a calm to them, a restraint. They don't feel the need to act on every move because they understand something deeper. Opportunity is constant something. Deeper opportunity is constant. But readiness is not. And if you're not ready, it doesn't matter how perfect the setup looks. You'll find a way to mishandle it, enter too early, exit too late, or interfere when you should have stayed still. That's where the line begins to blur between those who think they understand the market and those who have started to understand themselves. And once that happens, the market no longer feels like a battlefield. It becomes quieter, almost indifferent. And that indifference unsettles most people because they've spent so long chasing excitement, chasing movement, chasing the feeling of being involved, that when the noise disappears, they don't know how to operate. Most men never admit this. They're addicted to action, not profit. They sit in front of the screen, watching every tick, every C, and not because they need to, but because they cannot sit still with uncertainty. They confuse movement with progress. They believe that if they are not trading, they are falling behind. But the truth is, the market does not reward activity. It rewards precision. And precision requires stillness. There is a certain discipline in doing nothing when everything around you suggests you should be doing something. That discipline does not come naturally. It must be built slowly, through discomfort. Because when you first begin to step back, to wait, to hold your ground, your mind will rebel. It will whisper, "Look at that move. You're missing it. This could be the one. Just take a small position, just to stay involved." Those whispers sound harmless, even reasonable. But they carry weight, a pull, and if you follow that pull even once, you begin to unravel the very control you have been trying to build. That is how fragile discipline is in the beginning. It does not collapse loudly, it fades quietly, one exception at a time. I have seen men who understood the market perfectly, who could read price with clarity, who could anticipate movement with surprising accuracy, and still lose everything. Not because they were wrong, but because they could not stop themselves from acting when they should not. That is the paradox of this game. Understanding is not enough. You can see everything clearly and still fail if you cannot control when and how you act. And that control is not just about entering trades. It is about enduring silence, enduring boredom, enduring the slow passage of time without interference. Because the market does not move on your schedule, it does not care about your expectations, your plans, or your need to make something happen today. And when a man cannot accept that, he begins to force alignment. He starts seeing setups that are not really there. He justifies end that do not meet his criteria. He bends reality to match his desire to match, his desire to act. That is where things become dangerous, because now he is no longer reacting to the market. He is projecting onto it. And once projection takes over, clarity disappears. Everything begins to look like an opportunity. And when everything looks like an opportunity, nothing truly is. The few who succeed learn to protect their perception. They guard it carefully. They do not let impatience distort what they see. They do not let recent losses push them into urgency. They do not let recent wins convince them they have figured it all out, because they have already been through those phases. They know what it feels like to win, and then lose control to gain confidence and let it turn into arrogance. And arrogance in the market is quiet. It does not announce itself. It shows up as overconfidence, as larger positions, as less attention to detail, as the subtle belief that you cannot be wrong, not this time. And the market waits for that moment, not out of cruelty, but because that is when you are most exposed. That is when your guard is down. That is when your discipline is weakest, even if you feel strongest. I learned to fear that feeling, not the fear of loss, but the absence of it. Because when you stop respecting the possibility of being wrong, you stop managing risk properly. And when risk is no longer managed, outcomes become unpredictable. That is how men give back months of progress in a matter of days, not through ignorance, but through a moment of emotional imbalance they did not recognize in time. You must understand. This game does not forgive inconsistency. It does not reward you for being right most of the time. It rewards you for being consistent over time. And consistency is built on restraint, not brilliance. Restraint in how much you risk, restraint in how often you trade, restraint in how often you trade, how you respond to both winning and losing. Because both can lead you off course if you let them. Winning can make you careless, losing can make you desperate. And both states, if not controlled, lead to the same place: loss of structure, loss of discipline, loss of control. And once control is lost, the market becomes something else entirely. It stops being a place of opportunity and becomes a place of reaction, where you are no longer making decisions but responding emotionally to outcomes. Trying to recover, trying to prove, trying to fix what should have never been broken in the first place. That is where most accounts quietly disappear. Not in one catastrophic loss, but in a series of emotional decisions stacked one after another. Each one justified in the moment, each one weakening the foundation a little more, until eventually there is nothing left to stand on. And at that point, most men walk away. They say the market is too hard, too unpredictable, too unforgiving. But the truth is, they were never trading the market. They were trading their own emotions, their own impulses, their own inability to remain steady under pressure. And the market simply reflected that back to them, again and again, until they could no longer ignore it. The few who remain, the ones who begin to understand, do not escape this process. They go through it fully. They feel the frustration. They experience the losses. They confront the same impulses, the same internal battles. But instead of turning away, they pay attention. They slow down. They begin to notice patterns, not just in price, but in themselves. And that is where something begins to shift. Not all at once, not dramatically, but gradually. A little more patience here, a little more restraint there, fewer trades, cleaner decisions, less noise, more clarity. And over time, that clarity compounds. It becomes something you can rely on. Something stable, something that does not shake with every movement of the market. But even then, you are not free from the pull. You still feel it, the urge to act, to interfere, to take control when things feel uncertain. It never fully disappears. It just becomes quieter, more recognizable, easier to manage, if you stay aware. And that awareness requires constant attention, because the moment you believe you have mastered this, the moment you feel completely in control, that is usually when something slips, something small, something subtle. And if you are not watching closely, it begins again, not loudly, not in a way that demands attention, but quietly, almost politely, like an old habit knocking on a door you once closed. And the dangerous part is, it does not feel like a mistake when it returns. It feels familiar, comfortable. You take a trade you should not, but it reminds you of something that worked before. You loosen a rule slightly because this situation seems different. And in that moment, you are not being reckless. You are being reasonable. That is how it begins again, not with chaos, but with subtle permission. I have seen this happen even to men who have been in the market for years, men who have built discipline, who have seen success, who understand the game at a level most never reach. And still they slip, because this is not a skill you learn once. It is a state you must maintain. Every day, every session, every decision. There is no permanent version of you that is disciplined. There is only the version of you right now, facing this moment with whatever thoughts and emotions are present, and that version must be watched carefully, because the market does not test your knowledge. It tests your consistency under changing conditions. A calm market, a volatile one, a winning streak, a losing streak. Each one pulls at a different part of you. And if you are not aware of which part is being pulled, you will respond without realizing it. That is why the few who make it look easy do not trust ease. They respect it, but they do not lean into it, because they know ease can turn into carelessness if left unchecked. They stay grounded, measured, slightly uncomfortable, just enough to remain aware. And that awareness is not tension, it is presence. A quiet, steady presence with what is happening without the need to change it, force it, or rush it. From that place, decisions become simpler. Not easier, but clearer. There is no internal argument, no negotiation, just action. Or inaction based on what is, not what you wish it to be. And when you reach that point, even briefly, You begin to understand something most will spend years chasing without ever finding. Trading, at its core, has very little to do with the market itself, and almost everything to do with whether you can remain the same man when everything around you is trying to make you someone else. And when you begin to understand that, something changes, not in the market, but in you. You stop looking for constant confirmation. You stop needing every trade to prove something. You stop tying your identity to the outcome of a single decision. And in that space, something rare begins to form: stability. Because now you are no longer reacting to every movement. You are observing with intention. You are acting with clarity. And more importantly, you are choosing not to act when there is nothing worth doing. That's where real growth begins. Not when you win, not when you find a better strategy, but when you become harder to move internally. Because the market will always try to move you. It will test your patience when nothing is happening. It will test your discipline when everything is happening at once. It will test your confidence after losses and your humility after wins. And if you are not grounded, you will shift with it every time. But when you begin to hold your position, not in the market, but within yourself, you start to see things differently. You start to realize that most opportunities are not meant for you. Most movements are noise. Most impulses are distractions. And that realization, it simplifies everything. You trade less, but you see more. You act less, but you understand more. And slowly, without forcing it, your decisions begin to improve. Not because you discovered something new, but because you removed what was in the way. The fear, the urgency, the need to always be involved. And what remains is something far more powerful than any strategy: clarity under pressure. But even then, the work doesn't end. Because this is not a level you reach and keep forever. It's something you return to, again and again, through awareness, through honesty, through the willingness to correct yourself when you begin to drift. And you will drift. There will be days where you feel sharp, and days where you feel off, days where discipline comes naturally, and days where every decision feels like a battle. That's part of it. The difference now is you notice it sooner. You don't let it spiral. You don't let one mistake turn into 5. You step back. You reset. You protect your capital, not just financial, but mental, because you understand something most never do: that your edge is not just in your system. It's in your ability to remain consistent with that system when it matters most. And that ability, it's built quietly, in the trades you don't take, in the rules you don't break, in the moments where no one is watching, and you still choose discipline. That's the real work. And over time, that work compounds, not in a dramatic way, but in a steady, almost invisible way, until one day you look back and realize you are no longer the same trader. Not because you became perfect, but because you became aware. And in a game like this, awareness is everything. Because once you truly see yourself, your patterns, your weaknesses, your triggers, you stop being controlled by them. You begin to move with intention. And when that happens, the market no longer feels like something you need to conquer. It becomes something you understand without needing to fight it.